Now for more on CoreWeave, let's bring in MoffettNathanson Managing Director Nick Del Deo. Nick, you've been sort of cautious on this name given its valuation. What do these numbers do for you? I mean, there's continued strength, but not as much strength as some of the bulls were hoping for.
Yeah, I would generally agree with that take. I think that the numbers were solid. The backlog, coming in at 55 billion, up from 30 billion at the end of the second quarter. Remember that over the course of the quarter, CoreWeave actually disclosed about $20 billion worth of contracts signed with OpenAI and with Meta. So that explains much of what was in the backlog numbers. They signed some in addition to that, but I think that was largely as expected. I think the other thing that I thought was interesting in the report were the operating income margins. Last quarter there were concerns that CoreWeave was going to underperform on that front, largely because of pulling forward some deliveries. They're usually OpEx that you may incur before delivering GPUs to a customer. I think the fact that they did a bit better than expected this quarter was a positive. But I'd say in totality, probably solid results. I would say the stock in general embeds very high expectations. You need to do better than solid to get the stock moving.
Sure. So I wonder what happens to CoreWeave in a scenario where there's a hiccup in the strength of AI demand, because you've got the hyperscalers out there, Amazon, Microsoft, Google, that have their own data centers, sort of create their own demand. They're fine no matter what. But if there's not as much overage to suggest growth for the likes of a CoreWeave, are investors exposed if they're in that name?
Yes. Over time. Like you were saying, John, CoreWeave, a portion of their business model is basically providing swing capacity to hyperscalers. To the extent that Microsoft, for example, can't bring on as much capacity as it would like in a short period of time, they may lean on someone like CoreWeave to help out. I think, over a given period of time, remember that CoreWeave's contracts with these players tend to be multi-year in nature. You might sign a 4, 5, 6-year contract. So, if AI demand were to pull back some, the contracted revenue that CoreWeave has would presumably not be affected. But to the extent that this is a growth stock where people are expecting continued growth in their backlog, that would obviously have meaningful implications for the multiple.
I want to see a revenue backlog that has almost doubled. Obviously, at least in the near term here, there's a huge amount of demand that's outstripping capacity. So how meaningful is it that this Core Scientific deal has fallen apart, since that would have brought more infrastructure online more quickly?
Yeah, great question. So I think what Core Scientific really would have done for CoreWeave is give them access to more capacity faster. So remember, Core Scientific was a crypto miner that was basically repurposing a lot of its power capacity to support high-performance computing workloads, so basically building data centers. CoreWeave was its first and, at least to date, only customer along those lines. And I think Core Scientific was probably holding back some of its capacity, some of its pipeline, to try to diversify its business across other users. If CoreWeave had been able to acquire Core Scientific, it would have been able to grab that pipeline for itself and maybe accelerate its growth. I think without Core Scientific, the company will need to lead on other partners, other channels to really try to fill that pipeline, like the deals that it's done with other crypto miners or one that it recently announced with Poolside as good examples.